Happen. All right. Good morning, trade pros. Welcome to our morning market update for Friday. It's Friday already. Wow. Friday, April the 5th of 2019. This is George Pappas of Trade Pro Academy. Happy to be here with you. Today's a big day for the markets. We'll talk about why in a moment. First, this is my last chance to tell you about my second last chance to tell you about what's starting up on Monday. Monday, we are retaping our foundations course, which is everything you need to know about technical analysis and trading stocks and using those same mechanisms and technical analysis methods to apply it to whatever you trade and however you trade. It's a foundations course, so if you're just starting out, this is perfect for you. And if you've been trading for 600 years, you're still going to learn a lot. So come and check it out. All it requires is a swing, elite, or pro membership package. Everyone, all levels of our Trade Pro team will be available or will be eligible to join in on this live taping. We're going to tape Monday, Tuesday, and Thursday of next week, 2 lessons a night, very aggressive schedule. And then the following week, Monday, Tuesday, and Thursday, 2 lessons a night. And the week after that, it'll end on Monday. So it's a great opportunity. It's the perfect time for you. Last time we recorded this course was in 2012. It's in need of a refresh. And so this is a once in 7 years opportunity. I'm going to leave it there. That's all I have. It's definitely a good opportunity for you to jump in on that. We're starting Monday at 8 p.m. Eastern. All right, trade pros, let's move into our morning market fun fact. S&P 500 has risen in 6 consecutive sessions, longest winning streak since February of 2018. I said that in the elite room. I trusted my unconscious mind, and it worked. The broad index and the Dow are sitting 1.7 and 1.8% up respectively in that time period from their all-time highs, while NASDAQ is within 2.7% of its record high. So a little bit of weakness in NASDAQ compared to other markets. We're about to break all-time highs in the next couple of weeks. I really do see this market gearing up for a move through the fresh all-time highs. And as we do that, it's going to be very interesting because China's down 20%, Japan's down 30%, European markets are down 10 to 15, still off the highs. And so we're seeing really a divergence here with the US and other global markets. Very interesting to watch and keep tabs on. Today, we also had a huge report. We had the non-farm payrolls report come out. This is a jobs report that comes out once every month. The last time it came out was on March, I don't know what it was, the first Friday of the March. And that report was very weak. All right, it was surprisingly weak. And so today, the important thing was, how was the jobs number going to come out? Well, here's the deal. It came out strong. Consensus expectation were 170 to 200,000. It came out at 196,000 jobs versus 177 median consensus expectation. Strong beat. That was a good number to see, back in line with the growth in the labor market. Private payrolls were up 182 versus 177. Manufacturing payrolls, however, dropped minus 6,000 versus 10,000 prior. Birth death adjustment was lower, only 51,000 jobs added to the birth death adjustment factor. Here's the good news. Because we knew that we had 20,000 last month, traders today were really watching closely on what the back month revision will be. So today we released the number for the March jobs and the revision and the most accurate final number for February, which was 20,000. The back month got revised higher to 33,000, which is a 13,000 higher revision, which is positive. So if you add that to the 196, that puts us at 213 minus 3, 210,000 jobs total if you add in the back month revision. So way above expectations. The second fold release of that is most traders just stop there, but ignore the other 2/3 of the equation, which is 66% of the information. Average hourly earnings dropped this pay period to 0.1% versus 0.3 expected. So there's a little bit of weakness in average hourly earnings, which dragged down the optimism in the overall headline number, which means people were getting paid less on average for their hourly work on a month-to-month basis. So more jobs, but less pay. All right, and that's interesting. So that kind of took off the edge from the bullish side. And then we got the unemployment rate expected at 3.8, and it came out at 3.8. Underemployment rate was 7.3%, which means it's people who are looking for a job that can't find it. Change in household employment was down 224,000. Civilian labor force participation rate dropped to 62.9 from 63.2. So that means the number of people within the United States that are in the labor force has decreased slightly. All right. And the labor force now stands at 162.96 million. Why is that important? Well, you need taxpayers to fund obligations of both the government and folks who are in their retirement, because they paid into a pension plan, all right, and they're receiving money, and now it's important that we pay into the pension plan so they can receive the money. And when it gets to be our time to receive pension money, it's not going to be there. I can tell you virtually that with 100% certainty, I'm not going to get a single dollar pension, yet I pay into it. As a business owner, it's 9.9% of your employment income in Canada, up to a maximum every single year. I pay 9.9 cents for every dollar I receive of income for, guess what? For people's retirement. So yeah, that's that. All in all, if I summarize this report for you, hang on, let me mute our good friend here. How was the market reaction? Gold initially dropped a little bit. Bonds dropped also. Strong report. So gold and bonds lose some of their value as they're being sold off. Equity saw a little bit of a bid, and then the market died out. So it became very unopportunistic fast. We showed up with the elite team. We took a few swings. We didn't hit a home run. That's okay. Sometimes your next at bat is your best one. That's where we're kind of in the. That's where we're at. This is kind of a pulse read. We're ending this week. We've had a very bullish week. We're pressed against highs, and I think the market's getting a little tired. I do see some upside, but first in the morning, I wouldn't be surprised to see a sell-off in S&P back down to key support structure. Watch for that. In other news this morning, Boeing admits their MCAS system played a key role in the 737 MAX crash. This is, in fact, the CEO made a statement. Here's what he said. This is by Dennis Muhlenberg, who is the CEO of Boeing. All right. With the release of the preliminary report of the Ethiopian Airlines Flight 302 accident investigation, it's apparent that in both flights, the Maneuvering Characteristics Augmentation System, MCAS, activated in response to airness angle of attack information, which is a sensor. I was reading up on this yesterday. Very interesting stuff. Did you know that the Boeing 737 MAX 8 has 3 separate computers powering the aircraft? Guess what? Each one of those computers is different. Each one of the processors in those computers is by a different manufacturer. So I'd imagine Motorola, AMD, and Intel. Motorola makes a lot of military grade and aircraft chips, so I guarantee you that's probably the main one. And they have all these fail-safe mechanisms and secondary protections. This entire MCAS system is based on a sensor that is typically known to malfunction. That's one of those that, in the industry, if it malfunctions, like another sensor. It's kind of like a VWAP failing after trading at it 6 times and trading like, the VWAP failed. Yeah, no S. That's what it's supposed to do. Anywho, he also said, we will add additional layers of protection and will prevent this data from causing MCAS activation. So he's saying it's a software upgrade. Flight crews will always have the ability to override MCAS and manually control the airplane. A lot of industry insiders are saying it will not be a software upgrade. It will require hardware fixes. The problem with the Boeing 737 is that they put heavier engines on a small plane, and they had to move the fuselage, I always butcher that, forward, the design. So basically it puts a dive sort of angle on it, because when you move weight forward, it puts the balance off towards the front end. So they had to put the MCAS system to control that and take that account. That's a very interesting revelation. I'll tell you this. I think Boeing is getting really close to some massive liability. I think it's going to open up the doors to some class action lawsuits and liability. It's not looking good. Yes, the stock is rebounding, but I'd be very cautious. I'm not trying to sound alarm bells here, but I'm just telling you as an investor, if you own that in your portfolio, you might want to take a little bit of sauce off. It's had a great run. In Asia, Japan's up 0.4%. Hong Kong's down 0.2%. China's up 1%. India's up 0.5%. In Europe, at midday, all markets are slightly bullish, but flat mostly. Futures in the United States, same deal, 0.2% across the board for the Dow, S&P, and NASDAQ. Crude is flat. The pit session opened at 22. Now we're bid to 47. So we're getting a little bit of a bid off this crude oil pit session open at 9 a.m. Eastern. Gold finding a little bit of weakness here, and then back above the open as the S&P 500 nosedives and gives back some of the non-farm payroll gains. And Bitcoin down 0.6%, still just shy of 5,000. 10-year yield up 2 basis points. Non-farm payrolls came out today at 8:30. 1 p.m. Baker Hughes rig count. Oil traders, take note. That's going to be a volatile time. 3 p.m. consumer credit, very interesting report that I'm looking forward to. I'm not going to really trade it by 3 p.m. on Friday. We're not trading anymore. I finish early on Friday, especially on non-farm payrolls Friday. Finish early and I just tap out because that's what you got to do. Monday after non-farm payrolls are slower as well. So remember, Monday will be a slower day. 3:30 p.m. today, Fed's Bostic speaks on disruption and opportunity, shaping policy in a digital world. And that's what we got on the calendar. We're seeing a little bit of sell side pressure here on equities. Watch for lower support levels. If they hold, we could start buying dips. If they break, we're going to start selling rallies. Where are those support structure levels? I'm going to turn around and tell you right now. All right, trade pros in the room. I will tell you where the support structure is today. There's two levels mainly I'm looking at. Breaking news, Russia March CPI just came out. Breaking news, India announces upcoming bill issuance. Watch out, S&P is going to make massive moves on that news. All right, trade pros, we're going to get started in the room. YouTube, thank you for tuning in. Have yourself a great weekend. I hope to see you at the Foundations course retaping. One opportunity in 7 years. This is it. There's no extra cost for it. You just have to be part of the Trade Pro team. Guys, take care. I'll see you there. Goodbye. Have a wonderful weekend to you and your loved ones. Send you love, joy, and happiness. Ciao. Trade pros, let's get started.